Hello and welcome to UAE Achievers Talk Show Season 2. Well, I'm back again with another episode, and this time we have Mr. Ashish Singh, who's a prestigious guest today. He is working with Finbuddys United Financials as Vice President. He is a wealth management expert and one of the top financial advisors in the region. So let's get to know him, and this advice you're getting for free, so might as well stay till the end. Hi, Ashish. Welcome to the show.
Thank you, Anul. Thank you for having me here.
I think it's all fair to start your journey, your professional journey, understand more about you, how you got into the space of financial management, wealth management. Tell us more about you.
Well, there is a very interesting story behind it. So, during my MBA, my dad had invested before for our education, higher education, and somehow we realized that we didn't get the right advice at the time of education, higher education. So that point of time, I realized that I think I should get into this industry wherein I can help a lot of people, to manage their finances, to plan their financial goals, and make sure that they are achieving what we didn't do in our life. So that's how after MBA, I joined one of the prestigious bank in India, and I after a couple of years of working there, I landed to UAE, and it's been 8 years up and running and advising people, a lot of people to achieve their financial goals in their life. So that's how I came into this industry. And this is one of the interesting industry, I would say. A lot of people knows that how to earn money, but they don't know how to save it, how to invest it, where to invest it. So that's what I'm doing right now.
Well, that's amazing to know. But talking about basics first, right? We're talking to most of the masses here, the community of Expats Hub. What are the basics like? For example, where should one start from when it's about investing?
Well, it starts from the earning, right? The moment you start earning, you need to make sure you need to be cautious enough where you're spending those money. In the beginning, when we are young, we generally tend to spend where it is not required even, right? And that's where we start making the mistakes. So I think we need to control there only, and that's how we will be able to be a successful investor going forward.
You said something about mistakes, right? So
Yeah.
let's just bring some notice to what are the common mistakes that you see people doing it and how one should avoid it.
So, being into this industry, of course, we meet people on a daily basis. We meet investors on a daily basis. And we realize that not everyone, but some of them have made huge mistakes in their life. And when I say mistakes, I mean, it is not an intentional one, maybe the unintentional one. The basic mistakes that we make is, as I said, we don't know where to spend. And there's a basic rule of budgeting that says that 50% of our maximum 50% of our income should be spent towards our needs, which is basic requirements to live a life, right? The maximum 30% should go towards our wants. It can be shopping, it can be maybe spending on travels, but at least 20% of our saving should go into any investments based on the risk profile of the people, and there are other multiple criteria to decide on, but at least 20% should go towards the saving, which a lot of people don't do it, and that's where the mistake starts.
Because you touched upon the topic of saving, I think let's understand what's the difference between short-term saving and long-term saving.
Well, that's a very interesting question. Everybody have some of their goals in their life, and it can be a short-term goal, it can be a long-term goal. So when we do invest somewhere, when we do save somewhere for a shorter period of time, maybe less than 3 years, I would consider it as a short-term saving. But when we have a long-term goal, maybe you have a kid who is 5 years old, you wanted to plan a kid education for your son or daughter. That is another 10, 15 years. That's a long-term, savings or investment that we call it as. So that is a major difference. The term itself define that the short term means a shorter tenure, which can be less than 3 years.
Sure.
And longer tenure can be more than 3 years.
Because we spoke about investment, let's assume people like me who are still not working on their investment portfolios. And I'm sure there are a lot of people in Expats Hub who are just hearing this and they haven't started yet. What is the first step? Where should we start from when we want to start making our investment portfolio?
Well, I'll take you to the question where I explained the budgeting part, right? So the 20% should go towards the saving or the investment. So before investing, I would say we need to create emergency funds, which should be there in our bank account or maybe a liquid kind of funds, wherein it should help you to sustain for another 6 months of your life in case if you don't have regular income coming into your bank account. And then the next steps comes as an investment. A lot of people have realized that they invest majorly into mutual fund because it is considered as one of the balanced approach towards investing. So maybe the mutual fund or ETFs can be one of the way to begin the financial journey or the investment journey, and that's what I would like to convey here.
So that's when you need to reach out to Ashish and understand more about it,
Absolutely.
right? Talking about, because I know in our previous conversations also you keep talking about portfolio management, you talk about diversification. How do you do diversification, and how does it, help people? If you could bring some light into that.
Right. So first we need to understand what is diversification, right? So diversification can happen at various level. It can be at economic level. I mean, when we invest into any portfolio, I'm referring to that. It can be as asset class also. It can be into real estate. It can be into financial market. It can be into FDs, in fact, right? So there are multiple avenues. There are multiple asset class that includes when we talk about diversification. Why it is important? The second part of our conversation is that when we diversify our money into different asset classes, when we invest differently in different places, our risk goes down, right? We can't put everything into one basket. So diversification is important because it reduces the risk. At the same time, we get an opportunity to explore various asset class.
Amazing. I mean, I'm just thinking on top of my head that there'll be variety of clients coming to you, and I'm sure they are in some of the other situation. Whether they are people like me who haven't started yet, whether they are people who are in absolute debt, and they want to figure out themselves. And I'm sure there are much more cases. Like, bring some light to what are the kind of clients you usually get. And I'm sure there's an audience which is unaware, and we need to educate them for sure, which is why we are also doing this podcast. But what are some of those specific clients which come to you?
Yeah. So basically, there are few type of clients that we cater to. There will be a client who is investing consistently for a longer period of time, and they knows their finances. They understand how to save, how to invest, where to invest. So we add value to them as well because being into this industry, we deal into Indian and global investment opportunity. So we try to diversify their portfolio well. We come across different client wherein they are into heavy debt, but they have their financial goals in their mind. They wanted to achieve that. So we do help those kind of people as well. Then we come to certain clients wherein they are basically nearing to their retirement also, and they need regular income for themselves for maybe another 20, 30, 40 years. It can be back home in India. It can be into global market. I mean, sitting here anyway, if somebody is expecting to have regular income for another 40, 50 years, we plan that way as well. If somebody is planning to have, 40 years, 30 years of regular income after retirement, we plan for them as well. So it is a mixed clientele, I would say, wherein everybody is different, everybody have different requirements, and based on their age, based on their risk appetite, we plan their futures, we plan their investments. So yeah.
What are the sum of budgets that one should have to start thinking about investment portfolio? Like, is there a specific threshold that you think minimum this much, and then it makes sense, or can someone start from small?
Well, I think there is no minimum to be set when we start investing. I would say as the moment we have our first paycheck, we should start investing whatever amount we can. That should be the investment journey. That's where it began. And slowly and gradually, every year, as and when our income goes up, we should keep investing more. So, I mean, people in UAE can invest as low as 2,000 dirham as well. And people in UAE are investing maybe 20,000 dirhams a month as well. So it depends completely what kind of income you have, what kind of expenses you have, keeping in mind that the budgeting thing which we covered, right? That 20% should be going towards your investment. So if we follow that, I believe that, in my opinion, that we will be able to achieve all our financial goals as and when it is due. So
Amazing.
there is no minimum. It starts with maybe 1,000 dirhams.
Wow.
Yeah.
But still, I'm sure there is a HNI client, or there's a certain expectation that one has, that this is the kind of clients, one should have. And I'm sure there are so many of them sitting there on Expats Hub. Would you want to just throw some light on that?
Absolutely. So, what I consider it in a different way. Everybody have three common goals in our life. One is kid education, another is retirement, third is buying at least one house, right? Maybe for our own consumption when we retire, right?
Sure.
Whether the person is earning 10,000, whether the person is earning a million, right, a month, they have at least these three common requirements.
Sure.
And with that, we help people who is earning as low as 20,000 dirhams as well. We help people to invest as low, as high as maybe a million dirham a month. So there is no as such criteria. We cater to everyone because we understand the financial goals from where I'm coming from, right?
Yeah.
So we cater to people wherein they can save a smaller amount as well. They can save a higher amount as well. So yeah, for HNI, of course, there's a definition for that, wherein they should be able to invest at least $1 million. We cater to those kind of people as well.
Got it. Got it. And then talking about, because both of us are Indians, and while I know you invest, you do a lot of opportunities even in the global markets, but I want to keep the discussion very specific to India and UAE. So, and you have you have your career in both, we've tried your hands in both the countries. So how is it different? How is there an investment style which is different in India and UAE? How does it go?
Well, you rightly mentioned that, I have the exposure of both the market, so I know it well. In India, there are some limitations, Sitting in India, we can only invest in India. That's one of the limitations.
Yeah.
The second limitation I would touch upon on the taxation in India. So whenever we invest, we pay taxes on that. Whenever we realize the profits, we have to pay some taxes there as well. In UAE, the place where we are sitting right now gives an opportunity to invest anywhere in the world. We wanted to invest into, let's say, a mutual fund which is based out of US. We can do that. Based out of China, we can do that. It allows us to invest anywhere in the world. That's the biggest advantage that we have. Along with that, we are not missing on the Indian opportunity also.
Right.
We can invest in India sitting here also as an NRI. So, and plus in global market, there is no tax.
Sure.
It is completely tax-free money. So if somebody invests in India and invest for, let's say, 20, 30 years, and whatever capital gain they have to pay 12.5% on equity-based investment, considering the current taxation slab, which is not here in this part of the world, which is one of the good thing that our investors are enjoying. So yeah.
So Ashish, what are the top hot investment products that your clients are demanding at the moment?
That's a very interesting question, I would say. So, it completely depends on the client type as well, right? Not everybody have the same goals, same, lifestyle, same investment pattern, same risk appetite, right? Not everybody prefer to invest at one place. So, it's quite diversified, but I would include major of them. And some of them are like, mutual fund ETFs. That is one of the ever-running product, I would say, ever-running investment options that everybody looks forward. Investing into stock has become trendy nowadays as well. Not for short term. I'm not talking about the trading as such, but investing for medium to long term, like 3 to 5 years horizon. Then there are certain different products which fetch regular income to the client as well. So after COVID, we felt that people have realized that they can't be dependent on one income. They need multiple source of income to survive, to manage their expenses. And that's how there are certain products which generates regular income to the client on a monthly basis. Just after the investment itself, you don't have to wait for 5-10 years to get that. So those are certain products which are in demand right now, which people are looking forward to invest, and people are investing heavily actually. Yeah.
Amazing. And again, bringing back to some of the common topics of of our usual day-to-day life, which is like, first topic that I want to talk to you is about the kids' education, right? How early one should start thinking about saving for their kids, and same time, if you could do a comparative study of sometimes does it becomes too late while we realize, right? So tell us about that.
So well, it is better that you start the moment you have a kid, right? The moment you have a kid, you should start investing for him or her. And I'll tell you the reason behind it. At the end of the day, we have to plan our kids' higher education, right? So why to wait? And wait for what, actually, right? Let's say I'll take you one example, basic example today. If you look at the cost of higher education today, it is around $60,000-$70,000 a year,
Yeah.
right? And the higher education stays for 5 years.
Yeah.
Graduation plus post graduation takes 5 to 6 years. That means you need at least $350,000 to $400,000 in today's cost. Imagine you have a 1-year-old kid and there is 16 years more to go for the higher education. That means with the inflation of 4-5%, even if you consider that way, this $70,000 which you're paying now will become at least $140,000, $150,000, $160,000 a year.
Wow.
And you have to multiply by 5 years then, right? So you need close to $1 million.
Yeah.
So you have two ways. Either you start investing now, and if you start investing now, in that case, you have only to invest maybe 30-40% of the total capital required, which is like maybe $300,000 to $400,000 if we consider 1 million as a corpus required after 16th, 17th year from here, right? Or the other way around, what people do that they wait for 5 years, 10 years. When the kid is closer to the higher education, at that point of time they realize that, oh, we should have started early, right? And what happens there also, they have to take the loan of 1 million. At the end of the day, they will end up paying 1.3 $1.4 million to the bank along with the capital and interest, right? There also you have to pay the EMI.
Right.
By the time you are retiring, you are just paying the EMI for your kid education, higher education, right? So why not to start saving now, wherein you have to save lesser amount to get and reach to the same level of corpus. If you take a loan, you are paying more. So as early it is better, right? So the moment you have a kid, in my opinion, you should start investing. Like how I did for myself, right? I have a son now. So I have started investing for his higher education. So maybe by the time he'll turn 16, 17, there will be a sizable amount of corpus which will help him to go for the higher education easily.
Amazing.
Yeah.
When you mentioned earlier about the three things, I think you also spoke about retirement, right?
Right.
So that's, I think, for most of us, like where we are in this sort of space where we keep thinking about, couple of years down the line. And then there's also this thing of pre-retiring and all of that, right? So how do you plan the retirement? How do you make sure your retirement is safe and you're planning well in advance financially?
Right. I mean, there is no age to plan it, to be honest. There is no defined age as such. However, as I said, the early, the better, right? Why we should start investing early, even for the retirement, right? Because it will give you a power of compounding impact in your investment. That means you'll be able to earn interest or profit over your earned profits. And that's where there's a real juice in the investment. So I would say the moment you start earning, maybe after a year or two, you should start thinking for a longer tenure, which is your retirement, and start investing from there onwards itself. So whether it is kid education, whether it is retirement, that will happen in everyone's life. We cannot avoid that.
Yeah.
So it is better that you start investing early for longer tenure. There is no shortcut to make money in the market, to be honest. The only way is to stay invested for a longer tenure, and that's where you'll be able to achieve your financial goals in your life without any stoppage. Yeah.
So Ashish, so many of us, and I'm sure people would agree on the platform as well, are very scared to take the first step. And they're scared because they don't want to lose their money. They're scared because they don't want to take risk. How are you so confident that you'll be able to grow the money for them?
Amazing.
If you could answer that for us.
Yes. So see, first of all, we educate our clients. It's not just about investing. They should be aware where they're investing. They should be aware about the markets. They should be aware about the other investment opportunities. Once someone is informed, aware, they're more confident, right? They feel more confident, and that's how we perceive our client also. We first educate them before even investing. Now, how to avoid the risk when we invest, or how to avoid the risk when we start investing in the beginning? Because you're right, it's everyone's hard-earned money. People think twice, thrice before investing. So one is the information that we provide helps them to understand it in a better way. Along with that, we make sure that portfolio is diversified. When portfolio is diversified, not into one basket, then automatically the risk goes down. The risk goes down, right? And the third thing that we do is to invest for longer tenure. We come across a lot of clients. This is that somebody met and advised them to double their money in 3-4 years. I mean, that can happen if market supports, but that's not realistic. So the longer the tenure in the market, when you stay for 10 years, 5 years, 20 years, depending on your financial goals, you automatically reduce the risk, right? There is no special management is required there, because in shorter tenure, if you look at the market, it is always volatile. That's the nature of the market, which nobody can avoid it. So, and if you look at the longer tenure, you always average it out. You always make sure that your investment is done in a right way. Your investment is there in the longer tenure in the market, and that's where you reduce your risk. So, yeah, I mean, the simple key way to invest is be invested for longer tenure. Yeah.
Amazing. I'm going to be a little selfish now because I think for my community, I want to understand some money hacks that you could give it to us, one or more, whatever you feel. What could be the simple money hacks for financial management?
Well, there's no as such hacks, I would say, which I already, we discussed during our conversation as well, that the only way to make money, start early and stay for longer. That's the only way to make money. There is no shortcut to make money. If that happens, nobody will invest for longer tenure. All the banks, all the big, investors like Warren Buffett, he can invest for 2-3 years and he could have become multi-millionaire, right? Which didn't
Sure.
happen. He was there in the market for longer tenure. So we need to, take a lesson from our, big time investors, and understand that there's no shortcut to make money.
Thank you, Ashish. This has been like supremely amazing podcast so far. I know it's very, very informative. But last two questions before you go. Tell me, give us one financial advice or a message, that you have for our viewers, our members, our followers at Expats Hub.
Don't invest everything into one basket. That's my first advice. Don't invest for shorter tenure. If your goal is longer, if your goal is for 10 years, 5 years, invest accordingly. And be consistent in the market. Stay for longer. Don't time the market. Nobody can time the market actually. You have to be in the market for longer tenure. That's the only way to make money. Yeah.
I think you guys have got some amazing free tips, and now it's high time that you start planning your investments, and who better than Ashish can help you with it. So don't forget and reach out to him. That would be our recommendation to you. So Ashish, how can our members and viewers reach out to you? Because after this amazing podcast that we've done today, I'm sure they would love to get in touch with you.
Well, you can reach out to me over LinkedIn. That could be one way. And I do share, I'm sure you have noticed it, I do share a lot of informative things there, which help people to learn more about investment. If you search just on LinkedIn Ashish Singh Finbuddy, you'll get it. Other way is to contact me over my phone, which is like 522-986461. And that's the way you can reach out to me, and I would love to help you out throughout your financial journey. And we don't just offer new investment. For Expats Hub community, we would be love to offering free portfolio advice on their existing investment, and we can give you the second view on your current investment which you have it. Yeah.
I think you guys just got lucky. Thank you so much, Ashish. It's been a pleasure to have you on our show. It has been super, super informative, and it's all our pleasure to have you here.
Thank you for having me here, Anul. Thank you so much.
So, guys, that was Ashish Singh. He's the Vice President at Finbuddys United Financials. He's a wealth management expert and one of the top financial advisors in the region. That's what you need. You need to reach out to him and start planning your investment portfolio today. With that note, I'm very, very thankful for staying in touch with us for this podcast, and stay tuned because we're getting more such industry experts your way.